Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Kaya Limited, a very interesting share that has come down a lot from its highs. Let's understand what should we do in this company and whether you should invest in this stock or whether it is a multi-bagger or not. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about Kaya Limited, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, and you will also get chances to ask me questions on Patreon, queries which I'll answer in one line. If you take the $10 a month, you can say scheme, then you can view my portfolio, my watch list, and also ask small queries, one query per day on the markets as well as companies. And for detailed market analysis or company talk, you can contact me on email, and probably we could set it up a telephonic conversation for that. And you also get access to exclusive articles, videos, and breaking news that I publish before YouTube on Patreon. Now about Kaya, it was established in 2003 and they provide skin and hair solutions. Currently operates in 100 plus clinics in 27 cities here in India. Operates in Middle East and in parts of India, probably across India. They have around 800,000 customers and 140 plus dermatologists at their branch, and they have started selling Kaya skin and hair products as well. So they are becoming as a skin consumer company as well, where they sell health products in order to help you become better as a personality. If you look at the financials of the company, then the sales were flat, where the profit was down big time. So from a loss of around 16 lakh, it grew and swelled to a loss of 21 crores. But it is a debt-free company, and large players have bought into the stock. So for Inju Walyat as well as Radhakrishnan Damani has got into buying some stake, 1% stake in the company. Not huge, but still that is a good cheerful sign for the Kaya management as well as for Kaya. Now, if you look at the performance of the stock has underperformed over the last 5 years. It was trading at around 13, even 1500, 1450, 1500 at that point of time, even 1540. But now today it is trading at 154 or so. It has lost 90% of its value from those highs. It has recovered 60% from the lows after the news broke out that RK Damani and you would say addition of shares have taken place by other marquee individuals. So the stock made a low of 92.93 and then staged a stellar recovery of around 60 to 70% already. Outstanding IPO listing of Marico Kaya that took place in 2012, and it just shot up to beyond 2000 levels. So from around 2100 2200 levels, I've seen the stock just go down over the last 8 years, and the reasons have been pretty clear that the numbers have not come in. The numbers have disappointed the street. People thought that it is a few quarters affair, 2 quarters, 3 quarter affairs, but from 2014-15 onwards the numbers have started deteriorating, and that has coincided with the oil crash that we have witnessed. From around $80 per barrel it was in 2012-13 and so on and so forth, all the way to now $30 per barrel, and it touched even I think zero a few weeks back on the exchanges. So that has hurt their business in the Middle East, and the Middle East business has also contributed handsomely to Kaya's top and bottom line. But as things are extremely bad there because of the oil situation, Kaya is struggling. uh, Results have been say inconsistent, so as I mentioned, and as oil has dropped, so the major chunk of the earnings that come from abroad, that is from Dubai and the Middle East, that is not working at all. Bottom line remains a worry. So the stock being so low, the stock is down, and then bottom line in negative all the time is a worry for shareholders. Why would I say Kaya is a compelling buy? Although you need to take your own decision, but in my opinion, India's demographic need is being served by Kaya. So if you buy it over a 7, 8, 10 year period, you will understand that whatever products that Kaya is putting forward, and with the skin clinics, etc., there's huge demand for such kind of services here in India. And I suppose when this whole pandemic ends, and a lot of things come normalize in the next 6 8 months, I have a feeling the stock could run up, because their business might just take shape, and people would look to groom themselves even better and visit the clinics as well. Valuation comfort is another reason why I would like to buy the stock, because at around 800 900 levels it was looked extremely expensive, but at 150 160 it looks extremely attractive. And so probably you're taking a risk of 30 40% downside, but then the reward could be multifold, and that's why I put up that line that whether it is a multi-bagger. So if you go by the valuations at the moment, it should be 5 6x stock from here. This is a product for future. You need to understand that the kind of products or services that they are providing would really serve the higher income group, you can say youth. And I think there are many in that region, and for that to happen, the economy has to start. So that's why the stock is down. So the global economy not working well, and Dubai and the Middle East struggling a lot. And a similar thing has happened here in India with this COVID thing, and many other things. So what has taken place is that their demand has completely dried up for major products, leave alone a product like skin clinic. If you look at the technicals of the stock, then stock is in severe bear grip, may have seen the worst, although. So I believe 1995 would be the worst that Kaya would look like, and 180 is a very crucial resistance. Once it crosses 178 to 182 levels, then we could see a sustained up move all the way to 300 or 300 plus. At the moment, the stock is at 150 155. We are hoping that the stock could scale up beyond 180 post results, and with such marquee names into the company, we could see further buying coming in. The 200 DMA of the stock is 300 or around 300. The stock is half of that, so it is extremely weak on charts. Major fall would be a better buying opportunity, that you buy on major declines and wait for those declines of 3 4% or above that, 6 8 or so, and just sit on the stock. So what needs to be done? Buy as an SIP over the next 6 8 months. I have a feeling that the stock has bottomed out. I did make a video on Kaya earlier, and that it was an avoid, but at 150 160, I believe it is extremely attractive, and one should try nibbling into it. Always keep track of numbers and have a good 6 7 year time frame before investing. So this was my video on Kaya Limited. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.